Chief Innovation Officer at Alliance for Innovative Regulation Air. We thank you for joining us as well. This is quite a global feel as the case is. And of course, Madam Bukola Ajayi, who is a GM Architecture and Engineering, most fantastic. We thank you very much for MTN. It's good to see you, Madam. You're welcome. So at this point in time, I'm just going to hand over to the moderator, Martin Kwame Unwaga, President, Ghana Fintech and Payment Association, as he helps us do justice to the fintech and ecosystem track. Over to you, Kwame.
Thank you, moderator. Thank you, MC, and thank you for having me. As already discussed, or as already mentioned, my name is Martin Kwame Awaga, and I'm the president of the Ghana Fintech and Payments Association. Today's discussion is going to be very interesting, and we'll have a presentation first off, and then we'll delve into the panel discussion. So, as already mentioned, my panelists have already been introduced, and so I'll go straight to take the presentation from Nafisa Usman, who is a regulatory and financial technology specialist at the Central Bank of Nigeria. So, Nafisa, over to you. Thank you.
I'm sharing my screen just to confirm it's visible. Hello?
Yeah, please go ahead.
Okay, I'm sharing my screen just to confirm that my screen is visible.
Sure, it is. Thank you.
Okay. Good afternoon, everyone. I joined the session in the morning. I think I remember the moderator in the morning saying we don't want what is happening around the globe or what is happening in the US to happen to us in Nigeria. That's why we're gathered here. It's not gonna happen to us, hopefully. But you could see that's why I share the first screen I have. We could all see it's all bad news, bad news around the globe. So, and then let me just quote on a little bit of statistics. According to the 2022 Bureau of Labor Statistics, data cited in Harvard Business Review, roughly 65% of companies in the US alone failed during the first 10 years, and only about 25% survived for 15 or more years. What was that? What happened? What factors could result to this? So from the screen, you can see it has all bad news. I could see Facebook owners meta hits with records. I can see some issues around data protection, which is what is in line with compliance. But the bad news, this is Nigeria. Good news, at least from Nigerian perspective. My presentation is going to be, I'll be talking from Nigerian perspective. So my presentation will be from Nigerian perspective. So good that from the perspective I'm talking, it's good news. We have good news. I could see profits. This is just in March, 1.6 billion transaction around the fintech ecosystem. Wow, that's good. My name is Nafisa Usman. I'm a postgraduate researcher in Southern Business School, and then I'm a data analyst with the Central Bank of Nigeria. My research, I'm doing a research, and my research interest is around fintech, financial regulation, money laundering, financial literacy. Like I mentioned, Nigeria is my case study, and then regulation on its own. So what am I looking at? I'm looking at fintech and money laundering. Is there a relationship? And then if there is that relationship between fintech and money laundering, what is the impact with when regulation is there, financial regulation, and when financial literacy is there? So my study attempts to examine the relationship between fintech and money laundering, looking at bringing in financial regulation and financial literacy as the moderating variables. This is the theory I'm using. I'm using the technology determinant theory to determine the impact. And then this is the framework, the model of how I'm doing it. So fintech is the independent variable, and then money laundering, interrelated, the dependent variable. Then coming in, bringing in regulation, financial regulation, and financial literacy. So what happened? So I came up with, my team and I came up with 3 hypotheses. The first hypothesis is financial technology has significant positive effect on money laundering in Nigeria. If it does, what about financial regulation? How does it moderate that relationship? And then financial literacy, how does it moderate that relationship? You can see a little green light there. So after doing the analysis, I think some people in the hall must have come across, like 5 months ago, maybe must have come across around my survey. I pushed in a survey. With a quantitative survey, I pushed in a survey to get in data from any fintech users. What am I measuring? I'm measuring POS-based financial transaction, mobile-based financial transaction, ATM-based financial transaction, web-based financial transaction. Where fintech has 20 measurements, money laundering 11, financial regulation 5, and financial literacy 5. After going through, I don't want to bore you with the statistics of what happened. Like I mentioned, I pushed in a survey and I got respondent. I pushed in survey. Just when you enter my survey, when you tell me who you are, where you're from, I just randomly allow it to see how it's going to capture from the map. You can see around Nigeria. And then, like I mentioned, for the fintech aspect, this is what I'm measuring. So I got, after cleaning the data and tidying it all, I was able to do a regression analysis using 248 clean data, which is good. It's around the theory, around the justification of the theory of what I'm using. So what happened after I pushed in that and after the regression? Going back to the hypothesis. If you remember, I had 3 hypotheses, 1, 2, and 3. 1 is the relationship between fintech and money laundering, which was supported, meaning there is actually a relationship between fintech and money laundering. The second is, since there is relationship, how does regulation impact? Yes, there is regulation strongly impact on money laundering, but the thing is, financial literacy does not really impact on the relationship. I'm still a researcher. I'm still conducting my research. That's why I'm here. That's why I joined the session, to get in from like minds and then knowledgeable people from you. So the findings, what actually happened? So after the regression, like I earlier mentioned, positive relationship between fintech and money laundering. So what does that indicate? That is indicating that rapid usage of fintech increases money laundering exposure, just money laundering and fintech. But when you bring in regulation as the moderating variable, it shows that yes, regulation moderates that relationship. What does that imply? This implies that the higher usage of fintech, the higher the money laundering exposure, and financial regulation in turn reduce that, which is why we're here in the RegTech conference. But financial literacy does not really influence the effect of money laundering and fintech. I would like to hear what happened. I'm still investigating, I'm still researching, but I would like to quote one of my mentor, Professor Olayinka David West. I think I remember watching a video where she mentioned, after the central bank has pushed in the fintech strategy framework, she said that is a good effort done, but there is a data analysis. I don't have it here. But she said there is analysis that was conducted that shows that the fintech are one of the reasons, I think, why financial literacy will not moderate it, because the fintechs are highly educated, highly sophisticated, we could say, for those that have no financial literacy. So definitely you must be financially literate to be able to even do the fintech, because even from the questions I'm asking, they're a bit high level for somebody that has no financial literacy. So then what is the research recommending? The research is recommending why we're here. The research is recommending this gathering. The research is recommending what we're actually doing, because my research is recommending, no doubt, banks and fintech partnership is definitely about to face, or is already facing, because fintech is really, really disrupting the financial ecosystem. So definitely is facing higher regulatory risk, while direct fintech regulation is also emerging. So the study my study so far recommend urgent, strong, and technology-oriented regulation intervention to reduce money laundering related issues, such as the next generation of cash and payment infrastructure, cryptocurrency, and central banking digital currency, which I think as a country we're doing well. So basically, what does this research recommend? This is a little ecosystem. build fintech community, all coming in together. What does it recommend? We're recommending strong coordination, collaboration, partnership, all together, so that one fintech will be formally recognized into the central bank financial, into the formal central bank system, which we're already in there, but at least fintech, with the way the operators are maybe tiered layers, so that this will form the discussion of our panel. So what the research contribution, of course, is towards policy, practice, reaffirming the theory, and then construct the methodology, because it's a new methodology. So at least it shows it can go into that it's a methodology that can test the impact of fintech and money laundering. So Nigeria, like I mentioned, this is a video that I think it's refused to play, but it's the sandbox, the regulatory sandbox. So like I mentioned, Nigeria as a country, I think we're doing well. So these are some efforts, just a few of them, Nigerians' effort towards regulating fintech, and I think we're doing well as a country. So this, by presentation, forms an introduction to our panel discussion. This is the National Financial Inclusion Strategy. All that we've been discussing, all that we're here, we know we are all into the financial ecosystem. We know the National Financial Inclusion Strategy is like the little Quran, the little Bible that we're using to all see into inclusive economic growth towards financial stability. Thank you very much.
Thank you, Nafisa, for that presentation, and it was very enlightening, and it's kind of set the tone for the discussions we are going to have today, as basically it has to do with fintechs and ecosystem, particularly fintech regulation in the age of the platform economy. Now, what is a platform economy? Now, platform businesses or economy allows for collaborations with non-traditional partners and bring together different categories of customers. And in the financial context, savers and investors or lenders and borrowers create large scalable networks of users. Now, the entry of platform businesses into finance promises potential benefits to consumers in the form of new products, lower prices, convenience, wider choices, and enhanced consumer experiences. Now, at the same time, their models and technologies potentially threaten the dominant positioning of traditional financial service providers and create challenges for regulators. Now, in creating challenges for regulators, we're also going to discuss a little bit about how regulatory sandbox is shaping digital innovation in the era of fintechs. So we've heard from Nafisa, where she indicated that there's a correlation between fintech providers and then money laundering activities. And so the backstop there is regulation. So how are we going to leverage on regulation? Particularly now, we are seeing a lot of the regulatory sandbox initiatives across African continent. In Ghana, we have it. It has been launched. We have the same thing in Nigeria, Kenya, and other places in Africa. So that is becoming one way of regulating the industry. Now, a lot of times we talk about regulatory sandboxes and would like to know what it means. Now, a regulatory sandbox is actually a controlled environment that allows for entrepreneurs, regulators, and other players in the fintech industry to test out new financial products or services without being too constrained by inappropriate regulation. So on this panel, bear with me that we have the expertise, particularly ranging from regulations down to service providers in the industry, to discuss some of these things. And so without further ado, I'll draw straight into the questions, and then we'll see how we would help Nafisa in terms of getting some solutions practically, and having established the theories or the hypothesis around regulations in the fintech era. So my first question would go to Nick. You are with the Alliance for Innovative Regulations. In 2 minutes, just tell us what you do there, and then thereafter I'll follow up with the question. Thank you.
Thanks, Kwame. Good afternoon, everyone. Pleasure to join you all remotely today. I'm Nick. I'm the Chief Innovation Officer at AIR. AIR is the Alliance for Innovative Regulation. We are a non-profit that works with regulators, central banks, and ecosystems around the world to support learning, experimentation, and development and scaling of desirable technological innovations to make financial markets and regulatory systems fair, inclusive, and resilient. I was previously the Director of Innovation at the Financial Conduct Authority, so the FCA in the UK, where I had the pleasure of leading the division that was responsible for the FCA's Fintech, RegTech, and supervisory technology programs. So I led the area that was responsible for the sandbox and for tech sprints and for the FCA's internal programs around data science, artificial intelligence, and machine learning. So yeah, really, real pleasure to join you, and thanks for having me.
Per your own submission, in terms of what you are doing or what you've done, we see a strong background in regulations. And so my first question to you is, in the context of the platform economy, as we are all witnessing now, what are some of the key regulatory challenges that financial authorities, leveraging on your background from the Financial Conduct Authority, what key regulatory challenges does financial authorities and policymakers face when it comes to overseeing and regulating fintech companies, particularly those operating within the platform ecosystem?
I think there are several. I think the first is one of classification and definition. So these platform businesses, by their nature and by their business models, can sit within and also outside of established regulatory perimeters. So defining whether or not they're within the scope of regulation can be one of the first challenges for these types of organizations. They have non-traditional business models, they might have non-traditional structures, and many of them would have or could have international footprints that can create challenges around what parts of the business are within the scope of regulation and what are not. And then that presents another challenge for regulators. If these organizations and entities are not within the scope of existing regulation, should they be? And if so, how does the regulatory framework need to evolve to bring them into scope? So I think that's the first one, is kind of classification and definition. The second is some challenges around consumer protection. As you said, Kwame, and as Nafisa referenced, these big platforms operate as intermediaries between consumers and a range of products and services. And so regulators face challenges in terms of ensuring adequate consumer protection, determining who has liability for consumer harms in intermediated value chains can be quite difficult in some business models. And so regulators are concerned with things like transparency, fair treatment of consumers, how effectively risks are disclosed, and then some kind of specific tactical issues like how are disputes and complaints resolved and dealt with when you have kind of intermediated value chains. And so regulators have got to try and strike a balance between fostering innovation that might increase access to products and services that serve and delight consumers, with the need to kind of safeguard and protect those consumers. Data, I think, would probably be the third one I would reference. Like, these big platforms handle significant amounts of personal and financial data. And so regulators will have concerns around data privacy, protection, ethical use of data, cybersecurity. And this is a difficult one because ultimately regulators want to see more cost-efficient, data-driven financial services. And yet data-driven financial services lead to large collections of data that have their own risks associated with them. Nafisa's mentioned AML and crime. Clearly, that's another risk that regulators have on their mind. Money laundering, by definition, involves layering. It's one of the 3 steps of money laundering is layering. And so intermediation is a form of layering in financial transactions. And so platforms can be used to hide or attempt to legitimize illicit money used for terrorist financing and other issues. So that would be another big focus for regulators. And then the final one, I'll just name 5. The final one would be concentration concerns. So the business model And the intention of platforms is to kind of consolidate power and consolidate activity and relationships and business in relatively few large dominant players often. Platforms do well when they have sizable market share and when they achieve market network effects. But this can present risks and challenges around kind of systemic harm if you've only got relatively few players providing significant range and number of services to the economy. But it can also present challenges around kind of competition and choice for consumers in the medium term. And there's other ways in which big kind of monopolistic players can abuse their power. So that would be another issue for some regulators, would be this kind of concentration and competition risk. I was only asked to speak about the downsides. So just to give a sense, I don't only have negative opinions of these businesses, but that was my question. So thanks.
Awesome. I mean, interesting challenges there. You've given us a tall list. And so now I'll go to Mr. Issa Ali Yushata. Please give us a 2-minute introduction of yourself and how you are impacting or working within the fintech and ecosystem space. And then thereafter, I'll throw a question at you. Thank you.
Okay, thank you, Kwame. I'm the head of Unlimint in Nigeria. We have our headquarters at UK, and essentially we are a global payment company. We have integrated with all the card schemes in the world directly, and we also have alternative payment systems that we currently have on our platform. We have services that ranges from card issuing, card acquiring, business as banking as a solution, and at the same time, our both local and international gateway. Essentially, I am also the vice president of Association of Licensed Mobile Payment Operators in Nigeria. I am also the president of the Digital Financial Practitioners in Nigeria. So Sarah spoke earlier. She is the global CEO. So I am the head here in Nigeria as well. I have actually caught my career right from the outset when the financial inclusion strategy was passed in 2012, when we experimented with mobile money at that time. And that was exactly what gave birth to all of the proliferation of fintech apps that we have today. So it's been a journey. I've tested a lot of product services in the humanitarian sector, in the government sector, agency banking, interfacing with regulators, part of the committees for INERA, adoption and all of that. So I've done so much in the industry, and hopefully I should be able to share my experience.
President of Digital Financial Practitioners in Nigeria. That's a very big portfolio. And then we would like to follow up with the question that we asked Nick. Do you, in your line of work, what are some of the key challenges you face, particularly with the trend of fintechs coming on mainstream financial sector?
There are multi-layers of challenges. If I will speak to my experiences, in my previous work, I happened to work with a large e-commerce company in Nigeria, Konga. And if you know Konga very well, we have different business verticals, from logistics to travel to food, to the e-commerce, and of course the payment stream. Now, one of the most interesting things is that if you isolate all of these businesses, right, we are focusing just on the finance bit. That's the one that is transactional. But essentially, nobody really talks about who regulates the logistic company powering technology. So permit me to use a word I will coin here called ServTech, which means service technology, or tech serve, technology services. Now, you have a lot of apps, travel apps coming on board, food apps coming on board, logistic apps coming on board, agri-tech apps coming on board. Who regulate all of these apps? Who regulate the industry? We probably will have ministries that are directly responsible, organizations that are responsible for them, but nobody has actually thought of developing a strong and powerful regulatory framework to guide all of these businesses when we are going with an autopilot mindset in terms of digitizing commerce, digitizing, businesses essentially. So if you aggregate all of these together, you will know that there is a challenge on its own part. And across the different sessions we've had this morning, something has re-echoed, which is the way we have interoperability across board with operators. We should also have that extension for regulators. And I will speak deeply with that. You see, if you see CBN, NDIC, PENCOM, NICOM, you can go on, NITDA. We need to be intentional about every regulatory body coming together to simplify the process of regulatory framework. Because if you do that and you are using technology to power the platforms, it will make the operators have an easy ride in terms of developing their business model. Nick said something about the sandbox that largely had to do with experience. Now, if all of these framework are streamlined in one set data, it's easier for you to have a bird eye view on all the activities that is happening. So regulators can, at the punch of a button, look at what is happening in the industry. For instance, today, we all submit monthly reports to the CBN. Permit me to say that some of us might have doctored some of these reports. But if the regulators have a direct link for just view access only to all of the activities that are happening, then we would have solved the problem from the onboarding process, which is the data crisis that we are having in Nigeria today, the ununiform data that we have today with the BVN. We are all familiar with all of these challenges, right? We would have had a very clean data. Then at the same time, the business model would have been set appropriately for us to be able to, carry out all of the things we want to do. Now, regulators will be able to protect the customers because they are viewing every transaction. They will also be able to protect the operators as well. In my experience, we noticed a trend every quarter for agency banking. There is always chargeback at the end of every quarter. And we witnessed that there is also a huge impact in terms of fraudulent activities, most especially at the agency point, right? Now, globally, it has been projected that the impact of fraud in the fintech space is $1 trillion. But guess what? It has also been projected that by 2030, the fintech will be anticipating to make $1 trillion in revenue. If you juxtapose these two data together, you will see the crisis that we have in the fintech ecosystem. So the problem is multifaceted. We just need to isolate them one after the other. Nick said a lot about operational risks, technology risk, for instance. So regulators, rather than catching up with the game, they need to be proactive. Where, for instance, you need to invest heavily in technology. Regulators need to have huge resources in terms of human resources for them to be able to regulate the activities of fintech, also collaborate with critical stakeholders within the fintech space to come with actionable data, actionable intelligence for them to be able to carry out their regulatory functions effectively. So supervision even becomes much more easier when everything is automated. So they won't also necessarily have the problem of key man dependencies because they will go after subject matter experts, right, in the industry, people who are actually knowledgeable in the industry to help the process.
One thing that keeps resonating is that you all mentioned some key
to
issues when it comes to challenges that
Thank you.
the regulators face in regulating the fintech space. Initially, Nick mentioned classification and definition, consumer protection, data, AML and crime, and others. But one thing that you have actually given us an insight into with practical example within the Nigerian context has to do with collaborations among the regulatory bodies, because we see a lot of silo activities when it comes to each regulator doing things on, within the fintech ecosystem, trying to regulate it. So with that, when from your submission, when they collaborate, it will allow for smooth automation and then supervision, which would benefit the ecosystem at large. So thank you, Nick and Issa, for those amazing pointers when it comes to some of the key challenges that these regulators are facing. Now, I'll come back to you, Nafisa, now, since you are at in the seat of the regulator. Now, with all these challenges, how do you think they can be effectively addressed to ensure consumer protection, as mentioned, financial stability, and a fair competition within the fintech market or ecosystem?
Okay. Thank you. So, like, from all the conversation, Nick started from mentioning, he even layered, saying money laundering is a layer. If something is a layer, different categories, right? We mentioned even consumer protection is a layer, different categories. And then Issa went on. I like the fact that Issa started with mentioning the motivation where he even entered the sector. He entered the sector from the National Financial Inclusion Strategy, which started in 2012. So you see, the National Financial Inclusion Strategy started in 2012. We have that one that started in 2012, is the one that started in first, volume 1, volume 2, volume 3. So can you see the way? Different categories. So in what we're doing is everything, like when we started we didn't have much of disruption. An example is, okay, let me say Tunji. Tunji is an operator, right? Tunji, you're an operator. So if I use artificial intelligence to regulate you, Tunji, I remember Issa saying, we some of this, just yesterday I read microfinance, most of the microfinance, you heard about the news, their license are being revoked, lack of compliance. So we have come up, that's why we have the e-naira, we've come up, the digital currency, trying it, the sandbox, the what I will echo largely here is the innovative sandbox, which I really wanted to play the video, the innovative sandbox. So if you're innovate, go there, in that environment, let's there, test it, let's see. How will the competition be? How will the compliance be? How will the data protection be? But nevertheless, like I mentioned in one of my slides, if you remember, I have so many. I said, apart from the National Financial Inclusion Strategy, we have now the FinTech strategy itself on its own. That's why at a larger end, we need, as a country, we need an isolated FinTech strategy. But even in that FinTech strategy, remember, we have to have different categories. That's where the know your, because the KYC comes in for that, for consumer protection. You have to understand your consumer. Because even the FinTechs, like I mentioned earlier, financial literacy did not moderate, because research has shown that some of this FinTech are high-end. So even the regulation need to be tiered, and we are doing that. That is why currently, Issa, you mentioned for mobile money, we had regulation for mobile money, but now you need a regulation for FinTech. So we've come out, like recently we have the Nigerian financial industry, the National Financial Industry Cybersecurity, where that's a project that is ongoing, which will just for the industry itself. So we have a lot coming up, like the e-naira, like I mentioned earlier, as a country, I think we're doing, but the bottom line is compliance. So even the compliance, we need to tailor it. Like Nick mentioned, cross-border. I think I've heard many from Issa and Nick to cross-border. What if the regulation in Nigeria, in this jurisdiction, like I mentioned, I'm talking from Nigeria's perspective, but I'm studying in UK. While studying, I read a lot of things. That is why, if you remember, I said in my my research recommendation, it's a holistic, a global standard for fintech regulation, so that interpretability, cross-border, you don't have to have that issues of that. So, but as a country, we're doing a lot. Like I mentioned, we have the e-naira, we've done it, we have segregated a lot of regulations coming on. But I think the key point for me here is the regulatory sandbox, the innovative regulatory sandbox that we have.
Lisa, from the regulator's point of view, we'll come to the regulatory sandbox later. But one thing that I have picked out is that you mentioned that there's the need for all the various categories of regulators from CBN or in Ghana, the Central Bank of Ghana, which is the Bank of Ghana, and other allied institutions that are regulating the fintech space. There should be a national fintech strategy to spearhead how all these regulators act, so that they can unite or be united in their efforts to achieve one objective, a unified objective. Now, on that note, I'll come to you, Bukola. Please do give us an introduction, and then we can then go on with the question. Thank you.
Hello. Okay. Thank you, Kwame. Good afternoon, everyone. My name is Bukola Ajayi. I'm a General Manager, IT Architecture and Engineering, MTN. My career started about 25 years ago in the banking industry, where I was overseeing account opening and credits. I moved into MTN about 19 years plus, rose through the ranks, and currently I'm leading the architecture and engineering. I led the team that successfully deployed the platform for our Momo PSB. And currently now we are going through a payment transformation where we have digital platforms for our customers, and by extension, a whole lot of other things that we do. In MTN, we believe that everybody deserves the benefits of a modern connected life. And from being a telco, we are moving to a technology company. So we are not just offering the normal voice, SMS, and data.
I see
we are also involved in
MTN
fintech. We are doing a lot of partnership with insurance, with
especially in
agritech,
Ghana as well.
almost all the tech.
And the strategy
So
for
we are
them now,
involved in that.
like
Thank
you
you.
rightfully mentioned, is to move from a telco to a techco. Now, my question to you is this: we have our initial panelists have mentioned some things that I think relate to all of us. But one thing that we have all agreed to is that fintech companies often operate within a broader ecosystem that includes traditional financial institutions, technology firms, like your company itself, MTN, where you indicated that you are undergoing some payment strategies, regulatory bodies, and consumers. Now, the question specifically is, how can financial regulators strike the right balance between fostering innovation and competition within this ecosystem while ensuring adequate oversight and safeguarding the interest of consumers and the stability of the financial sector? Bear in mind that Nafisa already mentioned a national fintech strategy. Thank you.
Thank you very much. Okay, like the addict says, if you don't innovate, you are going to die. So everybody must keep innovating, and this also applies to fintech. When I started my career 90 years in MTN, all we knew there was voice and SMS. Nobody was talking about digital or smartphone penetration. Now we've seen that over time, the need of the consumer also is changing every day. People want to do it themselves. They want at the convenience of their homes to do a lot of things. Customer experience is now the differentiator. This is forcing innovation. Now we also see that most of the things we deploy then were on-premise. But now we have cloud offerings. And with cloud offerings, we see a lot of SaaS applications, software as a service, where fintech can, without any regulation, deploy fintech apps in 2 or 3 weeks. So it's more easy, it's more robust, it's more seamless. But guess what? Whilst we are doing that, we must have the back of the consumer. So for us to balance innovation and competition with regulation, the first thing I would say is there should be a collaboration between the consumer and the regulator. I've seen CBN do a lot of that. There was a time we're talking about securing our USSD. CBN called, like what we call a town hall. They call all the ecosystem stakeholders, the banks, the telco, and CBN. And we all sat down at the round table to say, how do we secure fraud on USSD? As a matter of that, when we came out of that, we came up with, okay, anytime you do a same swap, you must notify the bank. Should in case somebody wants to fraudulently swap your line and then go and wire more money. So I would say for us to balance innovation and competition, there must be regulator and consumer town halls, which needs to be done. Now, the outcome of those things is what will now bring into what I call early engagement and early collaboration with innovators, with regulators, and ecosystem. For instance, we have the five the top players in cloud. We have Huawei Cloud, we have Azure, we have a Google Cloud. We need to bring those people to the table. For instance, now Amazon is in Nigeria. We are pushing Microsoft to come. Many of them will come in because Nigeria is becoming a hub for them. Now, most of these fintech companies are deploying their solution on this platform. Regulators need to come to the table early enough to understand what are these new technologies so that they are not living in the 15th century. They need to understand the new technologies. Whilst they are embracing that, they now begin to pick up the risk because with every new thing there is a risk. How do we balance innovation with risk? So we come to the table, we get what the consumer needs so that we protect the consumer. Then we get all the ecosystem players on the same table. So they come in, we introduce the technology, the regulators introduce the risk, everybody have a part in it. And when we are formulating strategy, like Nafisa said, we know that at least we must have strong regulation that will not stifle innovation, because that's another thing. So when it's too strong that people cannot even think out of the box and everything must go through long bureaucratic process, you're going to kill innovation. I give an example. Before in the banks, all we do is traditional SMS, USSD. But now banks can use digital apps, channels. Now CBN has given that opening to say you can go ahead and create a banking app. They've told us these are the things that you can do on your banking app, but they did not tell us how to go about it. So if we pick things, people like OPay, Paga, they do similar same thing, but everybody has gone about it in different way. That is innovative. But they have an umbrella that says these are the things that must happen. So what I'm saying is, for us to encourage innovation and seek regulation, we must have that collaboration
very interesting
between
because you mentioned
the people that are
one of the key
innovating,
things I took out was
the
the fact that
regulators, and
we need to
the
secure the
digital
consumer,
ecosystem. Thank you.
and that is should be very important and at top gear or top priority of the regulators. And we should avoid, particularly knowing or having in mind that the go-to market strategy for fintechs are very quick and fast. We should try to eliminate long processes in validating their platforms when they have developed products and services. And now that takes us to the regulatory sandbox initiative. So on that basis, I'll come to you now, Tunji. Please, an introduction, and then we take it from there.
Yes, Kwame, thank you very much. I hope I'm audible.
Yes.
All right. I'm really delighted to be here this afternoon. Thank you, everyone, for joining RegTech session. My name is Tunji Odumuboni, Executive Director at MTech. We are really passionate and excited to be collaborating with central banks across the region of Africa and globally as well, and working on the other hand as well with fintech. We do believe strongly at MTech that the world of digital financial services, where technology is enabling emerging business model, require modern central banking. So our focus is really enabling that modern central banking paradigm with technologies that are fit for purpose, that can enable fintechs to land and scale. On the regulatory side, there's a lot of talk about how regulation can be an enabler if deployed properly, but we all know that it's been challenging for some fintechs, particularly startups, when it comes to getting to market with their innovative products. The regulatory requirement could be inundating as well, which is where for us at MTech we see the opportunity and pioneering the digitization of regulatory sandbox, and a lot of things that have been said by the panel. It's really what we are living to express in terms of creating digital platforms that enable regulators connect and supervise fintech, and not just fintech, even the traditional financial services players are innovating. And when you innovate, whether you are an incubator or a startup, you are creating product that could have inadvertent risk in the market. So enabling the regulators to also leverage technology on the one hand to manage the regulatory and supervisory process. And on the other hand, also, driving inclusive financial access for fintech, enabling central banks to deploy new payment rails like CBDCs that brings in a whole new ecosystem around payments. So that's the space we play at MTech. I'm really privileged to be trusted already by a number of central banks. We started with Bank of Ghana. Now we're working with Central Bank of Nigeria. Later this week, we'll be announcing our brand new partnership with the West Africa Monetary Institute that also enables us to deploy and work with similar regulators within the region. I think Mr. Issa Aliu spoke very deeply about the opportunities that comes when regulators collaborate, and we see that as well. So that's a little bit about me. I'm really delighted to be here.
Thank you, Tunji. Now, one thing that resonates in the work you do or in the role you play is that you provide more like the interface for the regulators to more like provide that sandbox, regulatory sandboxes. So MTech is big on regulatory sandboxes and deploying these solutions in partnership with central banks, like you rightfully mentioned, that you currently have one with the Bank of Ghana, and as well as you are working with the Central Bank of Nigeria to deploy same solutions. Now, when it comes to regulatory sandboxes, you bear with me that they have emerged as a mechanism for, to foster digital innovations in the fintech sector. Now, how has the introduction of regulatory sandboxes influenced the development and adoption of new technologies and business models in the financial services industry, particularly for countries within which MTech has deployed some of these solutions? Thank you.
Great. I think first of all, when you look at the way regulatory sandboxes get defined, it tells you a lot about the possibilities. It's a controlled space where innovation can thrive, but under the supervision of a regulator. And what that really means is that the possibility to sort of prior to the paradigm of regulatory sandboxing, it's been much about wait and see, because we know regulation will always lag innovation, and the technology that powers this innovation at times they come with their ills as well. They are not always intended for bad, but at times they do bad. And that's why, rightly so, in a space like financial services, where people's means of livelihood depend on that, payment, lending, people invest their fortune, you have to be very sure that you're allowing the right players with the right tech to play in that market. And that is really one of the, for me, one of the game-changing opportunities you have with regulatory sandboxes. That you don't really have to wait for what will not happen, because there's no way you can learn if you don't on how to regulate this emerging business model powered by emerging technology. There's no way you can learn as a regulator on right framework, the right rules to set, if you are not aligning those emerging business models to, even within at a small scale, to play in the market, so you can learn what works, what doesn't work. So the first thing you see when you see in an environment where regulatory sandboxes drive innovation is that there's a lot more openness and interaction between the regulators and the fintechs early on. It's always a platform of engagement. If you're a startup and starting up does not mean you have to have all in the world. You could even be a student in school that just has an idea, right? With technology, and one of my strong tenets and belief is that the same way technology is enabling financial services, regulation needs to be enabled by technology, and not just your legacy tech, and we have a lot of that, but modern tech that enables insightful visualization of risk. So how does data flow into a regulatory sandbox? And how does the regulator get very near real-time view of what is happening in the market as this product get deployed? Some of those
So some of those inputs then shape, the kind of rules to be set, the kind of regulation, and what you then see is even from an investor perspective, investors want to know that they are investing their money in entities that are on their way, if not already regulated, or on their way to getting some form of sanity in the way they deal the risk management, compliance, and so on and so forth. So you begin to see a lot more opportunities for fintechs deploying whether Web2 solutions or Web3 solutions to even scale. Because one of the first things you have to think about when you are thinking about building for building products in the financial service, how do you comply with regulation? What regulation exists? And if none exists, how do you work with the regulators to understand what you're building and be able to put fit for purpose regulation in that space? So from a scaling point of view, getting funding that you need to scale as an innovator, one of the things we also see is the legitimacy that can come, obviously over time, working with the regulators, helping you to prove out your solutions. Those are some of the few things that I can touch on at the moment in terms of what we see, how regulatory sandboxes can help innovation to thrive.
Thank you for that. So now, Isa, I would like you to add up to what Tunji just mentioned. As someone who is, on the field, engaging or interacting with ecosystem players within the fintech and digital financial services landscape, please, in your own understanding, do you think regulatory sandboxes has influenced the development and adoption of new technologies and business models in the financial services industry or sector?
Thank you. First, I would like to isolate it to Nigeria because we just finished that process where central bank, open up the application for sandbox, and the first quarter of this year, that application period closed. So we are waiting for CBN to give us the list of those successful people who actually went through the process. But having said that, I have knowledge on a particular product that I think will shape the entire ecosystem. So I'm privileged to talk about that here. I will talk about it using context, because if you look at what happened in Nigeria towards the last quarter of last year to the beginning of the quarter of this year, you will discover that the cash policy really impacted Nigeria. Why? Because whether you like it or not, Nigeria is still a serious cash-based economy. Let's not be carried away with the statistics that NIPS gives us. That we've done 400 trillion last year, and we are clapping and thinking that we are making progress. Yes, we are making progress, but I will dig down so that you can know what I'm reacting to. Now, ask yourself one fundamental question. The monies that goes out from the ATM machines and from the POS terminals are largely converted to cash, and they still go back and use those cash where? So ask yourself those critical questions. Now, those monies are used in the market, transportation, agriculture. You can name it. So if you dig down, you will see that we don't have a readily made available alternative to cash when you are talking about financial products. With my experience from 2012 to date, I can categorically tell you that nobody has been able to address this issue. Why? Because 70% of Nigeria population is in the informal sector, and these are largely wage earners. So they are involved in day-to-day activities in terms of business, which is largely retail-based, right? So to speak to the innovation that I know that is coming on board now, it's about a technology called the SIM scheme. where they are deploying the solution to fit in on a basic phone, feature phone, the normal feature phone we have for Nokia and the rest. So immediately they put that same skin on that device. The application for that particular operator comes up, then they can provide and show you the services you want to render. One, that service is not using data. So they've taken care of data because we have a peculiar problem in Nigeria with network infrastructure. That is a different ballgame entirely. And that is the reason why I talked about the collaboration of different regulators. Because if everybody participates effectively within the ecosystem, then technology can thrive and thrive almost seamlessly. Now, one of the features I love mostly about this product is that they've taken the last mile, the unbanked, into consideration, where they have customized the app to have 3 major Nigerian languages, where they can serve the major retail in the communities. Now they've added another layer to it, which is the IVR, interactive voice response, for probably the visually impaired. Now, this is a very powerful product because if you look at all of the ecosystem that talks about financial inclusion, financial inclusion is not about bringing the unbanked into the banking ecosystem. No, it's about impacting people's life using different financial products to touch their life and their household improves. So when you are talking about this kind of product that you're about to introduce, now there's going to be a lot of cross-selling on the product because one, they are able to address the issue of getting the product to the last mile. Then they can bring in products like microcredit, micro insurance, micro pension, all of those micro products that can drive financial inclusion heavily. And it will impact and have a ripple effect or a multiplier effect on their livelihood, whether they are doing business, whether it's personal transaction they are carrying out, right? So if you aggregate all of these factors and put them into consideration, you see that
awesome.
the innovative product that is about to be launched,
we are having some time
constraints,
approves,
so, will actually change a lot about deepening financial inclusion in Nigeria.
Now, Nick, with your experience within regulations in Europe and those areas, what are some of the notable success stories? We have identified here that, for instance, in Ghana and Nigeria, regulatory sandbox implementations have not fully taken off yet. Now, can you tell us some of the notable success stories of fintech companies that have benefited from participating in regulatory sandbox environment, and how did this environment help these companies overcome the nuances of the regulatory hurdles and accelerate their innovation processes?
Okay, yeah. So regulatory uncertainty for most businesses really hampers their growth. Uncertainty can delay their progress, it can consume their working capital, and it can kill a positive innovation before it really has even had a chance to succeed. So one of the roles of regulatory sandboxes has been to provide regulatory clarity and allow entities to test, as others have mentioned, kind of product market regulation fit for an innovation. So that can be really fundamental because by providing clarity, businesses can develop and implement their strategy, and also investors prefer certainty. So some of the successes that you see in Europe and elsewhere have been around how successful sandbox tests reduce a kind of information asymmetry between an entity and the market and allow them therefore to access venture and growth funding. They become safer bets in some regards because they've developed the product, they've tested the product, and they're clear on the regulatory structure. So I can think of a company, there was one called Laka that was a bicycle insurance startup in the UK. It was in our sandbox in 2018. It had a completely new insurance model where consumers would make payments in arrears based on claims against the insured pool in the previous month. So you wouldn't pay for insurance up front. You'd kind of join this community, and at the end of the month, all of the claims would be shared across the community and you would pay a premium then. So it's a completely different insurance model. We didn't have that in the UK before. And so by testing in the sandbox, that company Laka was then able to secure backing from an insurance giant, Aviva. It's raised, I think, $23 million in the past 3 years. It's acquired over 15,000 customers. And in the sandbox test that we developed with it, we put in place a series of different kind of caps and protections for the product that Lacquer itself hadn't conceived of. And that meant that the product was then more aligned with both customer needs, met the regulator's expectation, and then enabled that company to secure partnerships, funding, and customers. I'll give you one more example. I'm conscious of what you said, Kwame, about time. Another company, another way in which sandboxes can be really helpful, and Tunjay touched on this, was in kind of bolstering the credentials and establishing industry awareness of an entity and its innovation, so it can help to kind of bring some legitimacy and some brand recognition as well for that entity. And that can be really helpful in then developing partnerships, particularly fintechs that are in the kind of business to business space. So there's an entity called GlobaCap, which again was in our sandbox back in 2018. It was a completely different business. It was a capital raising platform for SMEs and institutional investors that used blockchain technology to streamline and simplify issuance of securities.
Yeah.
And so at that time, we hadn't seen that kind of business model. They needed regulatory clarity around settlement, record keeping, and some other compliance risks and issues that they weren't clear how to mitigate. And as a result of successfully testing in the sandbox, that entity has now gone on to raise, I think it's $16 million, and it has clients like the Johannesburg Stock Exchange. And they just would not have had that kind of reach and visibility in the wider market had not successfully tested. So I'm going to stop, given the interest of time. I can give you another example, but I'll let others speak.
Sure, but I'll come back to you, Nick, on the next question. You and Tunji would help me with this one. And that is, when fintechs, enter into the regulatory sandbox, which is basically a controlled environment for experimentation, are they exposed to some potential risk and challenges associated with this approach? And how can regulators effectively manage this risk without stifling innovation? Now, Tunji, this question goes to you, but I'll come back to you, Nick, on the same question.
Yeah, thank you. Thank you very much. I think the regulatory sandbox, as it were, it's a multi-stakeholder platform. So you could think about not just risk to the fintech alone, but even risk to the regulators themselves and the broader ecosystem that is there. I think some of those risks, if we just look at, even from the admission process itself, since it's a controlled environment, it means not everybody's going to play there. So who do you admit into that space? There's been some form of concerns around that I've seen and heard about when it comes to what's the thinking behind which sort of fintechs are admitted, particularly when you have a closely defined cohort model where the the regulator comes out to say, you know what, we are select or admitting fintechs of this nature, maybe fintechs leveraging this type of technology or playing in this type of space in financial services. The thinking needs to be a lot clearer, because what that could do is create this, at least a perception from the ecosystem, from the broader fintech ecosystem, that certain kind of tech or business model are being favored or prioritized. So from a regulator's point of view, there has to be a lot more clarity into the thinking, the selection process. And also, one of the things we're seeing happen more frequently is transition from the cohort model to at least an hybrid model that allows for, a mix of fintechs coming in as and when they are ready. So the platform is open. Since innovation doesn't happen in specific months of the year or in specific periods of the year, if I have an innovative product that is ready for regulation, ready to go to market, I should be able to come in. And that's one of the power of digitization, because the kind of concerns that regulators have is the cost that is associated, the resource intensity And a number of these things can be digitized with technology, and that's one of the things we are proving out, working with some of the regulators that are working out with. The process can be digitized end to end when it comes to admitting fintech, defining the rules, even when it comes to the reporting, enabling technologies can enable you to do that, the piping into the platform, the dashboard that enables you to visualize the right metrics as a regulator. Another one I'll touch on, I'll just touch on maybe one or two more. The concept of regulatory sandboxes tend to give the illusion that you have a foolproof and a fully safe solution, but it's not. You have to recognize the fact that you are trying to risk this product. So there has to be full disclosure, and this could be risk to. I touch on the fact that it's not just fintech. When you look at one of the critical stakeholders, the end user. So if I'm going to be using a product that is being sandboxed, do I know that there could be certain risk? And am I open to that innovation? For instance, if I didn't have a solution or an option, the other day I was trying to send money across to a friend of mine in South Africa, and I tried quite a bit to find a solution for that. We know how painful cross-border payment can be in Africa. So if I don't have an option than to use a solution that is still being tested in the sandbox, I can make that trade-off and say, well, maybe there's this risk, but at least I know the benefit I get. I do my transaction. So, but that full disclosure needs to be there because it's still a solution in testing. There could be risk around data privacy. There could be risk around even settlement. You want your transactions to be settled in time, but maybe it's delayed. How do you mitigate some of those risks? So it's not a foolproof solution in always that, once you have this sandbox, you de-risk everything. Part of that process, whether it's a 6-month sandboxing that the fintech is doing with the regulator or 1 year, whatever, is to kind of identify the risk and for the regulator to be able to put sort of controls in place to mitigate that risk. The last one I will touch on is the point around what does the transition look like? It's not an end, it's a means to an end, right? So if you think about regulatory sandboxes as a way for you to identify risks that you may not really focus on as an innovator that is really looking at solving problems, but inadvertently there are certain problems you're creating. And working with the regulator can help you look at things like AML, some basic things that you may not really be focused on. Are you managing KYC? Are you managing cybersecurity risk, liquidity risk, depending on the business model? So understanding that it's still a transition phase. And when you exit that sandbox, what does the next phase look like? Because you have to then scale and deploy this solution at full scale. So that's something that requires early engagement, even from the day one, between regulator and the fintech. What does the exit look like? And it's not always a successful exit. If you exit and it's not successful, how do you unwind? Because maybe some of these solutions, you probably have monies of customers with you. How do you transition and unwind that product? But hopefully it's a successful one. But even in the transitioning to a fully licensed product, what does that look like? Is it going to be a tweak to an existing framework? It's not on the 90 or the 90-day sandbox that you have that discussion. That is something that needs to happen on an ongoing basis so that the the seamless transitioning from a sandbox product to a licensed product can become a reality.
Sure, thank you. We have questions flowing in, streaming in from the online participants. So Nick, as Tunji rightfully mentioned, the regulatory sandbox definitely presents some form of risk to the regulator themselves because it is a multi-stakeholder platform. In your experience, what are some of these challenges and risks as well, associated with the regulatory sandbox?
I think Tunjay covered it really well, to be honest. So some of the points that he made are very key. So sandboxes are very human resource intensive. Yeah. And so one of my concerns or one of my observations looking at a number of regulators around the world is many are now launching with the sandbox, and it's actually quite an expensive and labor-intensive form of innovation support. I'm not saying it's not a good one; it is a good one, but it's quite a complicated and expensive one. And I think there can be risks of underestimating the complexity of properly overseeing tests in a sandbox, properly evaluating the risks and putting in place adequate and appropriate controls for those risks. Regulators need to have the policy or legislative authority to stop a test at any moment if they feel that the risk parameters have gone beyond something they find tolerable. So they need to make sure they've got that kind of mechanism in place. And I think, as Tunjay alluded to, there's also a risk that you can distort a market if you're only working with very few innovators and lending a lot of regulatory support and clarity to just a few participants in the market. You can have quite a distortionary effect on competition in an ecosystem. And so I think Tunjay covered most of the key risks, but what I would just add to it is I think these risks are most profound when a regulator only has a sandbox. So getting all of these things right is really key when it's the only service that you offer. There's a really good paper by the World Bank that I'm just going to plug called Global Experiences from Regulatory Sandboxes. And that gives loads of examples of where they have had positive impacts. But that report, and I guess my own view, is that if the sandbox is mainly existing to provide regulatory clarity to innovators, other services, things like an innovation hub or office hours, as it's called in some markets, or some kind of similar engagement mechanism that isn't a testing environment, it's a bilateral engagement mechanism between the market and the regulator. Those mechanisms tend to be more efficient and indeed are sufficient for supporting desirable innovation. So I think a regulatory sandbox shouldn't exist in isolation in an agency. And just to give you a little bit of colour on that, in the UK, for example, we do have a very, very, very busy regulatory sandbox. We've had 160 experiments in the sandbox, but we have had 5 times as many entities that we have supported on a one-to-one regulatory support model, where we just provide clarity and feedback on their business model and their innovation and their product, but not in a labour-intensive sandbox setting. So we've helped about 150, 160 in a sandbox and about 700, 720, I think it is, outside of the sandbox. But as I say, I think Tunjay covered most of the main risks, but this balance of innovation services, I think, would be the one thing I would add.
Sure, awesome, thank you. It's been an interesting discussion, and yeah. Yes.
All right.
Yes.
Yeah, Kwame. Thank you. I know that you're running to ensure that a lot of what you have written down there is exhausted, but unfortunately, we are quite pressed for time, and then we need to retire for today. Tomorrow is yet another fuller day. I want to believe you've actually responded to some of the questions that were online. And I think as a way of wrapping up this session, let me just quickly read that. I hope you did respond to that. One was at Isa. What do you think about the adoption of mobile money in Nigeria being very low? That one was from Idowu. You responded to that. I'm not too sure about that. Perhaps that's a way to wrap up the session. And Sheila and Samfuma, pardon me, who is one of our event discussants, actually says, how do we manage issues around limited access to resources, financial, technical, etc., by regulators? So I think perhaps as a way of wrapping up this session, each of the speakers will speak for about 30 minutes and put all their thoughts together. Miriam Buhari Shehu is asking Isa as well, what is the future of fintech in underserved communities and reaching the most vulnerable groups in Nigeria with financial literacy? A few months ago, we had a crisis due to the introduction of new Naira notes, which showed so much dependence on cash. And I think some of those questions have actually been answered. I would have entertained 1 or 2 questions from the audience right here live. Do we have 1 or 2 before? Because this is going to conclude today's session. I'm not too sure. I guess some of us are eager to retire on time so that we can be back here tomorrow. So, Martins, I want to thank you, but as a way of wrapping up with some of the questions I've just mentioned, I would like you to give each of your panelists,
yes, thank you, and
30
thank you for that opportunity. Now, in your closing argument,
this session,
just
as
as
a thank you
someone asked,
from you, and then we will go to the next
closing statement. Sorry, closing statement.
That way they can respond to some of the questions and concerns. 30 seconds each. Over to you,
yeah.
Martin.
I just want to ask each of the panelists, where do they see fintech, in
No,
Africa
I'm not sure it's
in the
an
next
argument, because if
10
it's an
years, in the
argument, we
next
won't
decade
leave
or
it
so?
to you.
That's just a
Thank you
closing question.
very
Thank you.
much.
So I'll start with
All right.
Nafisa.
Okay, on a quick note, I will just briefly answer Mariam or a question on financial literacy. We just launched a financial literacy platform called Sabi Money. So I think that's a very good platform for financial education. Wrapping up, where do I see fintech in Africa? I see it profitable, I see it potential, I see it integrating into the central banking system. Thank you.
Okay, so next year we'll discuss or delve more into Sabi Money. Thank you. Issa Ali Yushata, your closing statement.
Just narrow it down to the question that the MC asked here. For mobile money, I wouldn't say it's a shame, but it's been really, really tough, to upscale mobile money in Nigeria. But something happened last year into the first quarter of this year that suddenly, woke up mobile money operators. And as my colleague here earlier said, you can see the uptake of mobile money services in OPay, PalmPay, and the rest, because they were able to a large extent save our fees. And that is a testament to say that the experiment for mobile money from 2012 was not actually a mistake. And the future for fintech is 100% bright. Thank you.
Okay, Nick.
I'm going to answer the question about how do we address limited access to technical resources. So I would say three things. Okay, so collaboration with the market, with academics, with fellow regulators, with international peers. I would say leverage. So regulators don't necessarily think about how they can achieve leverage by engaging in kind of one-to-many relationships and one-to-many experimental moments. So I would give a kind of a plug for things like hackathons and tech sprints alongside regulatory sandboxes. And then I think education is the other thing within regulators. So we have done a reasonable job in the past few years in training small cohorts of experts in many regulators around fintech and general technology trends. But I think we need to do a much better job of kind of raising the base of knowledge across a wider community of regulators. So I think there's something to be said for more kind of digital training offerings to bolster human capital within regulators. So collaboration, leverage, and education.
Okay, thank you. Tunji, last man standing.
Yes, that always means I have nothing much left to say because everything has been said. But I'll just say, for me, I like to look at the next few years for fintechs in the prism of the report by McKinsey. They actually look at last year, I think towards the end of last year, there was a report by McKinsey, which says that we're actually at the end of the beginning, so for fintechs. So we're seeing a new era. It's not just, a beginning, but getting to this new era where we can see more collaboration across the ecosystem. Fintech, regulator collaboration, fintech banker collaboration, fintech collaboration. And what that sort of portend for the ecosystem is maturity. We hope to see a lot more mature fintech that are natively imbibing the right risk management, compliance mechanism, ultimately to provide the right kind of solution that mitigates any customer experience issues. And we look forward to that future. Thank you very much. Delighted to be here.
Thank you all. I see my the host, ensuring that we come off this session because time has been overspent. And so in my closing remarks, which I have a lot, I wouldn't say all of them here in terms of the takeaways. I would have them on my LinkedIn profile. You can go and read them there. And so thank you, my panelists, and thank you, Nafisa, for that introduction to your research. I think the takeaways that I provide later would give you some form of, summary into your research going on. Thank you, and then thank you for having us. Have a nice evening.